So now we're going to have our special session. Now we are going to talk about the effects of the carbon pricing. So before we talk, I want to give you some background or some ideas about this. So as you know, currently Earth is facing a serious threat called global warming. So everyone's been talking about it recently, since I think it's about Paris Agreement in 2021. So even the world government, the UNFCCC and the UN itself is keeping reminds the world that we are having a serious problem due to the increasing in Earth's surface temperature. Okay, so no wonder everyone is having an air conditioner right now. Okay, in order to combat those kind of effects, the company in the world now is preparing for a serious transition from the fuel high emission based economy to the green economy. So many of the government in the world is imposing what we call is the carbon pricing. So the carbon pricing itself is the instruments. The I think it's a very important instruments for us to impose and evaluate the effects of the carbon that have been emitted by our production process. So now, previously we don't taken into account about the carbon fee or the carbon emission that we emit from our production. But right now we need to hit some amount of expenses that we need to allocate in order to call to combat those kind of effects from the carbon that we emit. Okay, so some of the government already imposing those, just like the one in Europe, I believe, and in Singapore they did some uh, carbon tax, while the other using some ETS, the emission trading system. So it's kind of like they're making a carbon emission is or carbon emission quota, some kind of security that can be traded by one company to the other. Even it can be traded internationally. So the company in Africa can buy or can sell its carbon quota to the company in China or in Europe or in Indonesia. So, but some of the countries, just like in Indonesia, is not yet imposed those kind of tariffs. So we do have some kind of policy in Indonesia, though we have commit for the NDC in 2060, but currently the carbon fee is not yet implemented uh, in imperative way. Yeah. So currently in Indonesia is we only implement the voluntary way. So some of the company is buying a carbon certificate from the company who's issued the carbon certificate. Usually this kind of company who issued the carbon certificate is uh, from the company who generates renewable energy or something we call clean energy electricity. Okay, so for this kind of uh, jurisdiction that who hasn't imposed the carbon pricing, typically we can use the some kind of preparation in order to the company prepare to transition from the high emission economy or high emission process into the green economy or green business process. So this is one way to combat the transition risk. So if I say that tomorrow every company needs to pay the carbon prices, then I think a lot of company will going to collapse, especially when the government is imposing somewhat high tariffs, just like the one they did in Europe. I think they charge pretty much 60 to 80 dollars per ton in Europe, while the IPCC or I forgot it. IPCC, if I'm not mistaken, is imposing, suggests to government in the world imposing at minimum 30 to 60 US dollar per ton CO2 emission. So most of the energy company or high emission company in Indonesia will collapse over the night if they impose those kind of tariffs. So in order to be prepared for those kind of tariffs, uh, company can implement the internal carbon pricing so that they can uh, start to um, compound their what should I call it, carbon expenses into their financial. So it's not only a movement from the sustainability, but also it's a movement in financial way. Okay, so it's more a proactive way in order to be prepared for the IC for the real carbon pricing. Okay, so from what I say, carbon pricing basically is the internal carbon pricing where a company can evaluate what kind of how much its carbon expenses that they must pay if the real carbon pricing has been imposed. So it's basically voluntary tools for a company to be prepared to in its monetary value uh, to somewhat measure the significance of its carbon emission. Okay, so I think from this slide you can read that I can see from several key studies from McKinsey, KPMG, Deloitte, or PwC, and of course EY. There are reports that in 2022 there are 1,200 companies are already trying uh, 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 to use the internal carbon pricing, and while in currently there are 1,500 companies who start to implement it. So it's a quite a huge number of companies in the world that's already realized that carbon pricing is inevitable in the future. Well, I don't know how US is going to react about it, but I think even China or Japanese government is realizing this is something that they must uh, implement. Yeah, carbon pricing. So there are three types of carbon pricing that the company can uh, uh, can implement. There are three types basically. First one is the shadow price. It's somewhat uh, it's more like what should I say? Um, um, hypothetical. Just what I write in here. It's basically a hypothetical cause if the carbon price is going to be implemented now, and if we are using somewhat of benchmark tariffs, so maybe in 2025 we use $5 in Indonesia, of course. Currently the government is using 2,000 Indonesian rupiah for the benchmark, but to be more conservative, we can use, let's say, $5, which translates to how much is it? 8,000, yeah, 80,000 Indonesian rupiahs per per ton CO2 emission. So then they will know that how much the carbon expenses will be if it's composition. But this is only for the benchmark or hypothetical tariffs. So there's no real transaction that can be performed in this kind of methodology in shadow pricing. But for the second one, the internal carbon fee, this one is much more advanced than the shadow price, because in this schematics, a company will actually they will provision, what should I say, provision, uh, or they might spare in a real number of the financial carbon expenses that they measure using this the ICP into their carbon fund. So they will have the uh, some some carbon provision in order that can be used to make some investment in the future, okay, or maybe in the near future. So if we still use 80,000 rupiah, and then they emit 1 million ton, so then they need to reserve. Yeah, that's the word I'm looking for, reserve. They can reserve from their net profit after tax in the following year. Sorry, in the current year, so that they have a 80 80 80 billion US dollar that can be reserved in order to be prepared for the maybe, I don't know, reduce some of the emission, maybe buying some CCUS or the carbon capture and storage, or any measurement that they're willing to perform. Yeah? Or maybe they want to buy a new source of electricity. Maybe currently they're using coal base, and they're trying to build the PV cell to have a much more cleaner energy or electricity that they have right now. So, and the third one is not really popular, but it's called implicit price, and where we compared and benchmark the effectiveness between uh, carbon reduction to the external carbon taxes. So if company wants to after they of course after they did some internal carbon fee, and they want to check on whether it is much more financially sound if they pay for the taxes, or they need just to perform the reduction cost. Okay, so if they need to pay for the taxes for 80,000 rupiah, but then they need to reserve for 80 billion rupiah as expenses for the taxes. But if they did some transition process, or they bought some investment, they invest on some CCUS only for about 50 billion, then they can somewhat compare where should they pay for the taxes, or they just let go, or they invest for 50 billion. Yeah, so that's for the implicit price. And um, from this slide we can see that in several dimension, there are industry sector and region that I cover. I collect from several sources. From the first row, we can see that the energy sector on the global region, the ICP adoption rate is 50% of the top 100 company in the world. Yeah? And they use 50%, not 50%, pardon me, it's 50 US dollar as the price benchmark, yeah, as the median price. Of course, some of the companies using more than $50, while the others is a bit lower than $50, but in the median range, it's $50. As for the region Europe, the industry sectors is in general, so it's a mix, not only for the energy, but also for the transportation, electricity, maybe it's from the mining, things like that. They use the ICP benchmark of $27, so it's pretty much lower than the one in energy sector in a global, yeah, for the Europe. For Asia, it's a bit lower than Europe. It's $18 or 18 US dollar. For the North America, there's no data that I can salvage on this, but I can say there are 17% of large company that implementing the ICP adoption. We can see that the North America is more reluctant in adopting the ICP. I don't know whether the Trump administration is going to implement this kind of policy, since they don't buy too much on the global warming issue. Yeah. Okay. So here we can say that Europe is pretty much leading on this practice. Yeah. Okay. So as an important part of the ICP is proactive management of financial risk. So they did some quantifies the transition risk. So what of course the transition risk is the risk that uh, the company faces when they need to transition from the high emission business to the low emission business. So the risk is more on the financial side of the company, because they need to invest, they need to disengage some of their old assets. Some they need to some of the high emission assets needs to will be stranded, just like the coal based electricity plant. Yeah. So by using this ICP, they will know how much money that they are going to spend, and that's the risk they're facing right now. Okay. The second one is a robust scenario analysis. So basically, the CFD, we're talking about the stress testing. So this is for the forward-looking process that usually a banking industry perform in their BAU. Yeah. So even the company can do their own scenario analysis. If what about if the coal price is increasing 200%? What if the gas price is increasing 300%? What if the government impose $100 of carbon taxes price? Yeah, things like that can be measured when they have a ICP in place. Then they can do some benchmark and perform those kind of scenario analysis. So that will be great practice. So even we can build some of the financial model from that assumption. The third one is the hedge against policy shocks. Obviously, since we already prepare for the policy that yet to come, we already reserve, the company that implement ICP will already reserve some of its fund in order to combat and not combat it, to be prepared when the real tax expenses come. Okay, and of course improves investor confidence. So right now, some of the investor is somewhat uh, bit of some have some doubt whether the government is going to impose in this or not. But especially for Indonesia, there are several policy that's yet that has been issued but yet to be implemented. So if one company already built some sort of carbon fund from their yearly cash flows, so it will gives the investors a confidence in their financial soundness, because those kind of expenses has been reserved and prepared for future mitigation. Okay. Okay. Uh, Now we're moving about talking about the financial. Of course, this is a very good practice to strategically allocate the capital that a company has right now. Because if it's, as I mentioned, if it's done in the overnight situation, then there is no way a company will be prepared for it if they don't have any sufficient fund in their expenses, in their possession. So I think from these slides, the most important one is the second one: prevent stranded assets. So from today, we already indicate which one of the asset is possess high emission process, which one is low emission, and the one possess high emission can be mitigated using this kind of fund. Okay. And of course, future-proof investment that I have mentioned before. This is a part of the confidence in financial soundness. So the investment from the investor can be safeguarded using this kind of fund. Yeah. And the third one is in for M&A and procurement. Of course, whenever new investor wants to see the carbon liability and the price climate risk into valuations, they will see this kind of fund as a plus factors when they did some financial due diligence. Yeah. Okay. And as for the good side of this is, of course, ICP can enhance the financial performance, as it will drive the direct financial returns again from the study of the consulting firm, and I think it's from World Bank too. It's empirical research that shows ICP can increase the return on assets by 1.111. That's a lot, I guess, because primarily this kind of cost reduction can be brought upon the current year of projection, so that the company can invest more, and while the technologies is much cheaper in nowadays, because in the future those kind of technology who can make the company transition from the fuel-based uh, technology to the green economy will be much more mature, and will have a increase in the price in itself. Okay, so it's obvious why it's going to have a better return in asset nowadays. Yeah. Okay. From the case study of the non-carbon adjusted EPS grew faster. It's 12%. Basically, the carbon adjusted EPS. So they're seeing a good transaction that they can sold those kind of certificates or the carbon based fee to the markets. Yeah. Okay. And okay, of course, it's improve operational efficiency, because whenever we saw any high emitted business unit, and we can put some mitigation process in order to reduce those kind of emission from the business unit. Okay, this is also, and if you're talking about valuation, of course, we live in a world where capitalism is a peak. Yeah, basically, stock performance is will be considered a strong signal due to the strong faith from the investors. Of course, this strategy is not meant for a company who is on struggle financial condition, because adding more capital expenses from the carbon based fund, this kind of strategy will hurt their financial and cash flows. But for those company who has a strong capital flows, or the capital structure, or the cash flow itself, we can see those kind of confidence in having much more reserve of this kind of fund. Yeah. Okay. So how to implement this? The first one is to define the objectives and secure buy-in. So basically, we need to have some presentation to the board and ask them what's the plan in, and how to deliver it. Of course, they need to buy in from the financial team, the operation and the strategy from the first. Of course, the support from C-level, from the chief of finance, of course, from the CEO, is a very mandatory part, because this kind of movement will involves a lot of financial decision that will require a certain level. I think it's quite high level of the directors. Yeah, especially for those company who have a pretty high emission factor. The second one is to determine the scope. Of course, usually we start from scope 1 and scope 2. For the real sector, just like the energy sector, the transportation sector will have a typical high emission factor coming from the scope 1 and scope 2, while the for the scope 3, usually including the supply chain and the business travel, um, much more lower than the usual the typical company, especially but except for the financial services or other services. Usually they have a very high scope 3, because the finance emission that they, or from the loan that they disbursed and distributed to their debtor. So this part of the scope is pretty much critical for those kind of company. And the third one is to set the price. So basically, we need to have the price, to set the price for the current year, and we need to have a roadmap for the future in order to foresee, because just like the real carbon price, they won't impose high tariffs from day one, but they will have a strategy of increasing it year by year implementation. So of course, it is a really related with the risk appetite of the government with the uh, management level. So we can use some kind of special cost of carbon. Maybe we can use the Singaporean tariffs, and we imitate their roadmap of pricing, or maybe we can go ambitious way to imitate by imitating the European policy, but I don't think it's going to be a good buy-in. So, to setting the price, of course, it will tax some sort of financial simulation. So we need to have this kind of financial modeling when we set the price, because usually when we propose to the management level, to the C level, they want to have some kind of several options for them to decide. Okay. And then the fourth one is to integrate into the governance. So after we got the approval of the price setting, and we can start to um, calculate and and impose those kind of tariffs internally, of course, and report it to the financial team, whether we are going to use the shadow pricing strategy or the internal carbon fee. So it will reflect on the how we are going to integrate it into the governance. Because if you only use it as a shadow pricing, so we usually we don't need uh, involve the financial team too much, but we need to still need to report it to them, because they will need to know potential impact of the carbon fee into their financial reporting. Yeah, but for shadow pricing, it's not, it won't be reflected directly. And the final one, the fifth one, is just as usual: monitor, report, and evolve. Of course, by saying you evolve is we need to evaluate for every step that we did during the calculation and implementation of the ICP itself. Okay, for the ICP in the future is, I think, moving towards 2023, 2030. So the Paris Agreement Global is moving toward a real $100 for the real drive rail transformation, but I think the nominal level is somewhat in $25 right now. Yeah, so this is something that company needs to foresee. So they need to implement this and assess this as soon as possible, because time is not slowing down. Time is ticking up, right? We're moving toward 2023, especially in Indonesia. We have our NDC that we are going to have net zero emission by 2060, right? So sooner or later, the KLHK will make some moves on the implementation of the carbon trading or tax in Indonesia, but I think it's more towards carbon trading. Yeah. As for the new administration, I think it's 2029. The new government. I don't know whether it's Pak Prabowo will continue his office on the second term. I hope he will have a new vice president, of course. Uh, this kind of issue will be carried out by in the second term. I think I'm pretty sure that it's going to be implemented after that, because it will tough if he's going to implement it this year now, because yeah, so many things that they need to be taken care of, especially on the makan siang bergizi gratis. Okay. So on the second one is a comprehensive scope 3 coverage. It's, well, we're talking about how to measure the scope 1, 2, and 3, especially for the scope 3. It's need to be validated, and it's going to be calculated even more detailed in the future, because it will impose, not impose, sorry, it will affect the carbon pricing itself, and how much money that are going uh, to be paid for by those kind of company. Well, I think it's still covering scope 1 or 2, but it it won't make any. It still have some possibility of the government is going to impose the scope 3 coverage too here. Okay, and the thing that are very close is the disclosure. Okay, the ICP is quite disclosure on the new global standards. It's IFRS S2. I think it's going to be activated in 1 January 2027. So it's it's pretty much a must right now in Indonesia. So when you are disclosing your sustainability reporting, there should be some kind of some sort of report that you need to do, or especially for the internal carbon pricing itself. Okay. Well, the other is the Europe, and SEC is much more relevant to those who are listed in there. I think some banks in Indonesia, BNI, BRI, Mandiri is having has some sort of not some sort of has broad branches in there those in this jurisdiction. So, and also Unilever, Danone, of course. Some of FMCG is having this kind of uh, scope 2, I believe. Yeah. So final takeaway is in current ICP is something inevitable. I believe, because government is taking into this thing seriously, but with a pretty much slow pace. Yeah, but it's a very important to see this is a financial tool. So it's not just about the sustainability, because the real impact is usually will need to be carried out in a financial way. What's the financial impact? Because without financial impact, usually the level of the accountability is not very high. Yeah? Cool. And then the leadership is crucial, because the tone of the top will guide and foresee this kind of implementation, ICP implementation to the company in the current year and to the future. Okay. Of course, the CEO and the financial function will need to take broader steps in order to take this initiative into the real change. Yeah. Okay, so I think that's all that I can deliver to you today. Thank you for hearing me out. And if there is anything we need to discuss even further, please comment on the comment section, and maybe we can start another discussion about this again. Hopefully, uh, most of the or even all of the company in Indonesia start to take into account how much is the cost of carbon fee that they're currently currently emit right now. Because just like the oxygen we breathe in now, we don't pay anything for it, but actually it does have some degree of valuation in it. Just like the fee that we need to pay for the throwing out the garbage, to manage the traces. So this is the same with the carbon that we emit too, because we throw out the garbage into the air, and now it's coming back to us in the form of high emission and global warming. Yeah. So I think company needs to take a look at this and think it through and start to prepare it as soon as possible. Thank you. Good evening, good night, and assalamualaikum warahmatullahi wabarakatuh.